Good morning. We have with us here Deepak Sharma, who's the CXO advisor of some of the coolest startups in India. And he's also a board member at Experian India and Suryodaya Small Finance Bank. He's here with us to share his insights on AI in banking and fintech. So over to you. Can you tell us a little bit about yourself?
Thanks, Rachel. I think it's good to connect and be having this conversation. So I think as a journey, you would know that I've been into financial service for last 2 decades. A long inning at Kotak, where I was the last president and chief digital officer of the bank. And now, as I stepped out, I wanted to explore different things, a lot more in financial service, but largely around tech and innovation. And today, apart from, like you rightly mentioned, being on the board of a couple of financial institutions as an independent director, uh, I'm more curious and I'm contributing towards how technology is going to reshape financial service going forward. And that's where, like on the advisory board of Instabase, which is a large global firm in AI and Gen AI, which is based out of Bay Area. They work with some of the leading institutions globally. I help them think through for their Asia strategy, including India. I mentor quite a few startups who are building some cool stuff, either on SME, on the credit, on the multilingual, or handling even the NRIs who want to invest into India. So there are multiple spaces between technology, security, SaaS, AI. And yeah, I do spend time with a lot of smart folks and thereby just make sure that I help many growth stage companies find a path to profitability and probably find the next stage of growth.
So, could you expand a little more on the startups you have invested in and why you chose to do so?
I'm typically not an investor, but uh, when I look around, I find there are areas and opportunities that helps both the customers in general in our country and I think some of these problems are more universal. Country like ours, which has still multilingual ways of talking, writing, expressing themselves, but most of the financial service experiences are all built in English.
Okay.
That was good for first 100, 200 billion customers, but I think if we have to serve the real India of 1.4 billion, we need to be speaking the language of our customers. So there was an interesting company which was building something around a multilingual called Devanagari. I found their purpose was relevant. They were solving the real world problem. Chose to help them in this journey. Similarly, there was a company which was figuring out how to provide a credit basis, the GST, help small businesses unlock a better working capital and the credit to improve their overall health of business to expand. So there was a company called Pice. They were just building something around it. I found there it was an interesting space. Similarly, a serial founder came in and he said, I want to solve problem for NRIs who want to invest and manage their money in India. There was a time in Kotak I was involved in building NRI banking business, which became a very successful business. But we also knew a lot of things that banks cannot do.
Okay.
So we said, how can you solve a problem of not just opening a bank account or remitting funds, but after you have remitted funds into India, what are the opportunities? So if you are a global Indian looking at investing into alternate assets, looking into equity markets or private equity space, how do you come in? So I think each of the area, and I'm still curious, like similarly on Instabase, where I'm on their advisory board. It's not an investment, but I do spend time. How do we solve problem of unstructured data and convert it into insights? So I think every opportunity, either as a direct investment or as an advice, I do get involved in seeing that how this can solve problems.
So you've spoken about AI co-pilots in banking. Can you unpack what it looks like in practice?
Sure. So take an example of an aircraft. I mean, most aircrafts today, there is an autopilot mode, right? It's not that you will just leave controls to autopilot. And I think co-pilot is a model that airlines have built it for decades now. And I think as software starts to become more advanced in terms of landing, cruise control, all the navigation, it can probably replace a lot more of human error. I think similarly when we look at co-pilot across, be it not in financial service, be it in manufacturing, how does it help humans make better decision or improve productivity, take out a lot of repeat mundane jobs? None of us are really happy with our overall contact center experience because you go through an IVR, then they give you multiple options to punch through. And finally, when you get through an agent, a lot of times you're not very impressed with uh, the ability or the kind of knowledge or information that agent has on the fingertips. At a lot of times even they'll put you on hold. They'll have to go back and check certain things. So it's end to end for customer. It's not a great experience. For enterprises, it's not a scalable model because you need to put more people, the call
Train
hold
them.
time, the cost to serve, everything is a problem. Now think of an autopilot. Uh, moment you dial in, uh, if your context and your concerns are already understood by a bot, intelligent bot can try and solve a lot more between your text, your voice, your previous interaction with an institution, your past data. So there is a more contextual interaction is already available, which is completely on a bot. But for whatever reason, if bot doesn't answer, a human gets to see all the context right on their screen and the possible resolution or a solution. For example, you want a waiver of a late payment charge, say on a credit card bill. Now today, an agent may not be able to give you a real time answer of whether I can waive off these charges, and then that's like a bad experience. Now whether a charge can be waived, it cannot be waived. What are the two more things that they should pitch to that customer? All that is coming on a screen alongside the agent. So agent is now becoming more smarter, both in terms of taking immediate decision and also driving a conversation which is far more value accretive.
Okay.
So that's how in every space today. Same is for developer who's writing a software code. Same is the case for a credit guy. For operations, I mean, generating a credit proposal which is coming from data is coming from 30 different sources. Your bank statements, financial statements, stock statement, your company records. You have to compile everything. Now today in a co-pilot model, you pretty much get all that input which gets pre-filled, pre-generated in a form or a template that you require to evaluate. It can also throw certain recommendations based on the data and the rules or the prompt engineering you would have done.
Right.
And thereby it keeps understanding things lot better in context of an
For
organization.
an SME, which maybe they've been paying their GST on time, they have their taxes in place, they have their credit history, so and they probably have other statements to back their credit worthiness. So you're saying that it would be able to put everything together. Would it like appear as a dashboard, or how?
So you can define the format, you can
Okay.
define the data source that you need this to get pulled up. It can read. Just imagine, I mean, some of us are reading probably a book and it takes us probably a few hours to a few days depending on our speed. Now think of it, there are millions of pages and somebody has
In a
to
bank.
read. And you have to read all of that and come out with the most relevant context or the data because you don't need everything. But all you need is if there is a financial statement showing certain numbers and a balance sheet is showing certain numbers, I want to extract this. I want to then build a correlation between it.
Okay.
And then I want to apply certain formula or a table to arrive at the output. So there are various data inputs and you want certain outputs, and those outputs will define whether this is a kind of a credit I want to accept. So there is a series of input workflows, defined parameters and a certain outcome, and that is how any decision making process happens. Now
So
all
how
that
short,
gets
how does it cut down time? Like say, if there was like a loan for the loan approval officer, so if he manually had to take like 1 to 2 days or maybe like 4 hours to read through all the documents that this person with like wanting like a working capital loan needs, how much would it take AI to do the same task, to review all the documents presented? A couple of seconds?
pretty much not more than a minute.
Not more than a minute.
I mean, why would you need time? Because as long as your data is available.
Okay.
Data can be in text, it can be in image, it can be handwritten, it can be from public internet sources. As long as you have defined what are the source data, and then you have the defined LLM engine, it will be able to generate and give you an output. Yeah, but
Seconds.
just I think important when you ask Copilot, only reason why Copilot is more important today is it may not give you 100% necessarily accurate output. So don't look at Copilot as 100% accuracy today. But as long as it's giving you 90-95% output, but fast enough, that saves a lot of time. And I think that's what we are achieving today. But yes,
Efficiency.
as these models get trained, it will become probably more like an autopilot example of airplane that I just gave you.
Got it. So you were talking about the space where people are not going to be only in payments. If they were fintechs or they were payment banks, that everybody is going to, even UPI is at some point going to look at credit. So, with payments and credit increasingly intersecting with AI, where do you see the biggest impact in terms of underwriting and risk model?
I think there's a lot changing around it for a very simple reason that these are all different things that you, payment is a way to pay. Credit is an instrument to avail. Uh, and I think now we are seeing all these lines are blurring.
Okay.
For example, now regulators expect banks to know what is the end use of credit. If you borrowed money for, say, a business purpose, did you deploy that money for business or did you take that money out for something else? Because a lot of times when you see delinquencies, it's because the money never got invested into the purpose
Okay.
for which the credit was sanctioned. That's largely at a business end. Same is on a consumer or a retail credit. Like today, there is a concern on the whole unsecured lending. Uh, Unsecured lending for a consumption is okay, but if people are borrowing money just to repay another loan, then you probably are getting into
Further into the debt side.
and everybody is equally concerned that if there is a credit given, how do we get to see the better credit behavior
Okay.
of a customer so that it's not creating a systemic risk for multiple lenders and also overall for the economy. So I think one is at a broader macro level. I think one is second is now most of the credit is getting embedded at the point of consumption. So you go and buy a refrigerator or a washing machine, you get many options to get a credit right there. Probably you want to take a ride and they'll give you a credit which you can settle on a fortnightly basis. So I think we are as more and more credit and consumption gets integrated into one place. We will see payment and credit is just going to be one interface.
I want something really fast and it's convenient and it's so easy for me to secure this loan. But like, what about, or even like a payment, like I make a payment, but there's also the possibility of fraud when you enable so much convenience and it's all at your fingertips. So where is that intersection and how does AI play a role in, developing better risk models so that we are eliminating fraud?
Great question. I would say this is probably one of the most important things. This is like having good controls in the car in terms of brakes,
Okay.
accelerator, and all
Okay.
safety. You just want to move faster without controls. Accidents are bound to happen. I think today, as we are becoming more and more real time digital economy where money can fly out of your bank account in a jiffy if there is a phishing calls and mule accounts and identity and risk. I think a lot has been done, but in my mind, we still have a lot of things to do. So, for example, today there are mule hunter kind of initiative, RBIH came out with. There are many other industry initiatives to identify mule accounts, figure out who are these uh, players across ecosystem uh, who are defrauding customers, where the money is moving out. I think AI has a lot of role to play, but I think where it needs to become more sharper, work is happening is, for example, how do we build a cryptography keys as a part of authentication? Something that you cannot break those encryptions easily.
Okay.
So everyone, each one of us gets like our DNA is unique. Can our authentication keys be unique to us? I think
So do you, like like today we have like the CA auditing, like there's an IT audit. So do you think there'll be an AI audit also at some point?
there would be, and there should be,
Okay.
because at the end of it, as I said, all algorithms needs to be documented and auditable. So it is a part of audit scope.
Okay.
You just cannot run. Suppose you have one rogue outcome, who's accountable? You can't blame it on AI. It has to be blamed on a human.
Got it.
And that's why the governance framework is extremely important as this is getting rolled out across financial institutions, be it bank, insurance companies, NBFCs, and many of them are building these kind of, I would say, pilot to slightly more evolved implementation, but not yet the full scale implementation. And I think that's where having a AI platform which looks at all these aspects is important.
So what are your closing thoughts on how AI for the industry is shaping up?
I think a lot of work is happening. Whether it's right, wrong, I'm no one to comment on. But yes, again, if it's giving financial markets obviously crunch with a lot of data, a lot of trends, able to simulate various outcomes, scenarios. I think today AI gives a better model in which pre-trained models that you can use to see all the kind of scenarios. But does it really always hold the test of time? I'm no expert, but I do know the views of people who are building something around it. But all I can say definitely where I see value is the whole advice on investments, portfolios. Can AI help investment advisors, wealth managers give better, unbiased advice to their customers? Answer is yes. But will you completely today ride on that? Probably you will still use it as a co-pilot and not an autopilot.